All right, everyone, welcome back from another episode of Carnivore Trades. Today is Tuesday, January 17th, 2022. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis, which we will get into in a second here. But first, where's all my Tesla trolls? Feel free to drop a line in the comments. But as you can see, we finally gotten out of part of that Tesla trade for a nice gain here, and that just goes to show you what dollar cost averaging can do for you if you know what you're doing correctly. So I've been calling this for quite a while here if you guys haven't been following the channel, but obviously been long Tesla here, and when everybody else is panic selling, that's when I'm buying, and you can see that bearing fruits for us now. Congratulations to all Carnivore Trades members who took the trade and didn't panic like the masses did here. But Tesla gap and go day up almost 7% here. So we now have half off of that position with a break-even stop, adding to our already awesome year so far here. Just take a look at the gains already. Already 6 winners in the first month of the year. Just rocking and rolling here, basically printing money. Guys, come in and join. The profits are pretty amazing here. So anyways, into the rest of the markets here. So Spider is moving higher in the morning, and then we backed off a little bit. We're sitting down just fractionally currently. Triple Q's here having a nice day. Apple and obviously Tesla accounting for a lot of that. Microsoft is also green. Google down just a little bit here. Amazon backing off as well. For the most part, NASDAQ is still leading. Tech is still leading. You see the semiconductors are up 0.5%. NVIDIA up 4.5%. So a nice day there. And all in all, a little bit of a pullback here on the spiders, but I don't see any issues. We are pulling back off of this trend line here. It's on very light volume though. I'm not seeing any real structural sell signals here in the market just yet. And again, if I would expect the volume to be much, much higher. That does not mean that, again, like I said last week, I would not advise opening a fresh long here by any means, but currently it does look like the market is trying to hold up. Usually when you have an OPEX week, especially with all the premium that we have expiring, I mean, remember January is a leap month. So generally they want to keep the markets neutral to kind of sideways. You can see the VIX here, that gapped up this morning. That got hit really hard though. It is up 5%. I think a lot of this has to do with, it was open technically yesterday and it kind of opened up higher and now coming in. But so, I mean, I think we could see one more kind of vol crush here as we get closer to OPEX. But overall, market's hanging in there, really just kind of shrugging. As long as the semis are still leading, I'm going to find it hard to get too bearish here. Now, this is getting a little extended here. But this is what happens when you have, basically a failed bear pattern. So we had that failed bear pattern from the end of the year. And usually get a robust move to the upside. And it doesn't just play out immediately. I know a lot of people were looking to go short on the CPI number. It takes more time than that. Again, time is more important than price right now, if you ask me. Now we're getting closer time-wise, but we're not quite there yet. Market's still a little extended, though. I do think there is a little bit more upside here. I talked about this morning. You can see this 40-60 area. I think that would be kind of like your max move, at least for right now. Maybe in general. And then basically that would essentially be a pierce of this red bar here on the futures. This is 40.43 for what that's worth. But if this consolidates a little bit, there's nothing to say it can't push up for one more move. So we got to be careful here. I'm not favoring the long side here, like I said, in terms of wanting to go long, but I'm basically in the camp that the market can hold up is what I'm saying. Now, if you want to start averaging into shorts, which is essentially what I'm doing here, that's, I think, the way to play it here. But for right now, the market's still hanging in there, and we'll give it the upside bias really until it tells us otherwise. If we get a high volume reversal, then everything's off the table, and we're probably crapped out on this rally here. But for right now, market's hanging in there okay, and just seems to be shrugging at the moment. Let's look at the Russell here. Another reason. Again, you see the Russell just hanging in there. Never made a lower low. So take a look here on the, maybe like by a few pennies, but take a look at the low here versus the low on the spiders and the low on the Dow and the low on the Q. So Russell and the NASDAQ holding up better than the market. Again, that's still a good leading indicator. That's still a bullish sign in the near term. But Russell, basically fractionally lower today. I don't think there's much more upside. Could it pierce this double, triple top? Yeah, maybe it could get up to 190, but I think that's about it here. It is starting to get a little extended. as we get close to OPEX here. The Dow, obviously the big loser on the day, but the Dow doesn't matter, right? The Dow can be down. It's a price cap weighted index and it's blue chips. So we don't really care if the Dow's lagging, but the Dow is down on the back, of course, of Goldman here, down 6.3%. That's a big Dow component. This should be a little decent support here in the near term. That 348 handle, it is holding that for right now, and the 20 moving average. So terrible earnings report here for Goldman. Heavy volume there. This is support here, but I would not be a buyer. I mean, I think at most you're going to get maybe a bear flag type look here. We did short Goldman earlier last year. We took profits on that, took the second half off earlier this year. Would have been nice. In retrospect, I would have opened up a starter position last week and, would have gotten paid on that. But I don't like shorting ahead of earnings. So, it is what it is. Either way, this one took a nice hit here, and that is dragging the financials down. However, Morgan Stanley is complete opposite. So Morgan Stanley also reporting, and Goldman and Morgan Stanley are kind of like the Coke and Pepsi of investment banks, essentially. So have a little bit of a split tape there. So Morgan Stanley up 5.5%, and XLF is basically getting a split here. So down 0.5% here. Nothing crazy. Let's look at JPM. JPM's hanging in there. Yeah, Bank of America. So a little bit of a split tape, but obviously Goldman is the bigger company, and that is weighing down on the Dow, and it's really the fulcrum of the market right now. But again, you see tech holding up. As long as tech's holding up, the market can be in decent shape. Anyways, over to the semis. Like we talked about originally, it does look like they want to get up to that 229, we'll call it 230 area, which would be this pivot eye. Then you have that reversal bar in front of that, essentially. So semis coming into some resistance here, excuse me. They are getting a little short-term extended. Again, we're going into OPEX, so there could be some game playing going on. But as long as the semis are holding up, I'm not going to get too bearish here. IGV, same thing, up 0.5% here today. It does look like it wants to come up here and fill this gap. If you get through that, then you can get up to this pivot here. But IGV just kind of drifting higher along with everything else. I don't really see any problems right now, but this will eventually roll over with everything else eventually. Dow Transports, chopping around here on the flat line, really tight range here today. Again, stalled out at this trend line. We talked about that. Obviously going to be resistance here. You're a little extended going into that. If this starts to roll over and the spiders hold up, that could be a sell signal moving forward. But for right now, they're hanging in there. We'll just kind of give them the benefit of the doubt for now. Interest rates, so the 10-year gapping up here and then fading off the highs. So yields kind of a mixed bag here as the 30-year, same thing, gapping up and then coming in. The 2-year is green though, so that is a little bit of a positive here. So you have kind of the inversions. Let me just double check. I haven't looked at these in a while for you guys. Yeah, the inversions are coming in a little bit better here. There's the 3-month 10-year, although this is still way inverted. 108 basis points is a lot. And then the 2s 10s is at 66, although it is off the lows. But again, the 2-year I still think wants to get up to this inverse head and shoulder target. And for right now, it's holding up okay. So we'll just leave it at that. The 30-year, it's bouncing around. You have lower highs potentially. So we'll see what this does. I'm kind of neutral on it right now. I would have liked it a lot better. Like I said, if we got up to 40, 40, 40, 50, right in that area, which we never did. So for right now, I'm a little bit more neutral on rates here. But yeah, just a bit of a mixed bag here today. On to home builders, XHB, ITB, both lower here. I do think these are about topped out here. Like I said, doesn't mean they can't go up to 68. But that's about the upside I see for it. VNQ also fractionally higher here today. Maybe this can flag and make a run at 90, but that's about it I see for that as well. So I'm not a fan of real estate at this point. XLF, despite like I said, despite Goldman's the big hit, everybody's talking about Goldman. Oh, Goldman this, Goldman that, Goldman's going to zero, but nobody's talking about Morgan Stanley having, a very good earnings reaction. So again, I still think this can trade up here. I don't think the upside is that much, but it's holding up right now. And when you have, the whole sector here responding decently, I mean, you're basically down 0.5%. With one of the biggest banks down 6%, that's generally, a decent sign that it does want to hold up here in the near term. Eventually, this will roll over with everything else. But for right now, XLF's hanging in there. Maybe want to go test that double top. We'll see what we get over the next week. And then broker dealers, again, XBD green with Goldman getting whacked. So again, not a terrible not a terrible sign there. Again, there's resistance there at 487, 490, so we'll watch that moving forward. Outside of that, all right, let's get to energy. So we do have a trigger here on crude. So up 1.5% today. That is an inverse head and shoulders trigger if you close above that. So it looks like we're going to close above that by 5 p.m. All right, so that's when the futures market closes. Yeah, we're going to close above that. However, I want to caution, I would not go long here. If you want to go long here, all right, you can, but you got to keep a tight stop here. And the reason why I wouldn't go long, I mean, if you wanted to take a stab at it, I wouldn't have a problem with it, but keep a stop as a daily close below this white line. But the reason why I don't like it is because you have a weekly inside bar below the moving averages. So red bar inside. Until you get a weekly close above that pivot, this is still bearish on the dominant time frame. So that's why I don't like this. I think, I believe I mentioned it over the weekend. I think you could get a fake out here. So everybody's going to jump on, inverse head and shoulders, inverse head and shoulders. Everybody falls in love with these patterns, and then we're going to get a reversal, and it's going to close back below. And then you're going to get a bunch of bulls trapped. So that's kind of what I'm projecting right now. I'm neutral on it, though. I still will favor that bear pattern there on the weekly, though. So just be aware of that. Be careful with crude here. If you want to take it, I can't fault you for it, but just put a stop at daily close below that white line. Don't give it any more wiggle room, because if this fails, it's going to go a lot lower. So just be aware of that. XLE, nice bid earlier in the day, then came in pretty sharply off the highs. It's still fading even currently as we speak here. Not down crazy, down just 17, 18 basis points. Again, we'll see if it back tests this white line here over the next couple of days. But again, remember, it still has that weekly bear pattern here. So I think it's about done at about 91.50 here in the short term if it does trade up there. XOP, on the other hand, tried to get above this yellow trend line. So again, on the weekly, little bearish inside bar there and the 20-week moving average, and that got rejected here, although it is green for the day, so it's holding up for now. Just be aware of those patterns, though, moving forward. OIH still holding up really well. Again, like I said, over the weekend, this might want to go up to 350, 360. I still think this will eventually come back down to test 250, though, so I wouldn't really do anything with it at the moment. Anyways, nat gas hanging in there, getting a little bit of a bounce, up 7%. It's amazing. 7% is like a small bounce for nat gas these days. But a big move there, I guess, nominally. I think there's, I was watching this on the hourly here, and you can see this 200 moving average starting to flatten out here, and now you have potentially a higher low. If you can get back above these moving averages, I think you can possibly put in a rounded bottom. So again, I still like this weekly level here on Natty. Again, very oversold, and it looks like sellers are getting pretty exhausted to me. You just need to get above yesterday's high on a closing basis, and then if you can get back above 4, it probably goes and retests 450 pretty quickly. But nat gas does look like it's trying to bottom out here, but again, really needs to get some follow through on some of these bull bounces here in order to get some momentum. Anyways, dollar index basically flat today. It's basically into my buy level. I still think it has one more little push down in it. I know the euro is getting a lot of questions about short euro. I don't have a problem with it. Just be aware that it can move a little bit higher on the euro US dollar. And I think that the dollar probably has one more little dip in it. And then I think it'll be time to get in. But I haven't touched it yet. I know some of you guys have. I don't have a problem with it. It's so close here. I'm just being a little bit of a stickler on price right now. But I am kind of, I would say I'd favor the upside on the dollar here. Big picture, just near term, I think it's got one more little push lower. In fact, if you take a look here on the daily, you could make a case you're starting to put in an inside bar bear flag here. So if we trade sideways into OPEX, you could get one more little float down, or one more push down into that 101 handle there. But overall, I think it's getting very close. And if we look at gold here on the flip side, this is reacting off that trend line very nicely. So we went right up into that trend line, which goes back all the way to 2020. And nice little sell reaction here. Gold down 0.5%, which is a pretty big move. Again, it's overbought, it's extended. That's why I said, guys, don't chase gold up here. It's going to come back in. Doesn't mean it can't, doesn't mean it's going to go straight down, but obviously risk reward, you're way closer to resistance than support. So gold pulling back here. GDX pulling back as well, down 3.63%. Looks like a possible little kind of fake out there. So, a gap and go kind of day Friday. and then a gap and go to the downside today. So a little bit of a reversal there for GDX. That should have support around 30.25. And then in the meantime, silver here also lower, again, hitting that trend line one more time. And again, again, lower highs versus gold. Gold's higher highs, so it is showing relative weakness. Just keep that in mind. I wouldn't do anything with silver at the moment here. I know some of you guys want to short. I don't have a problem with it. I'm just going to wait for a pullback to buy. And then platinum coming back in. Again, 1025 should be good short-term support here. Platinum's had a nice run, but it does look like it's under a little bit of pressure. And then take a look at copper today. Just does not want to go down. Look at the volume there too, by the way. So they pushed it down pretty sharply this morning, and then bam, huge reversal here. It might be getting a little exhausted though. That's a pretty good move there. And then you have like basically a hammer at the end of a big move. So possible little like maybe hanging man type candle. I think the upside here is a little bit limited. But copper's holding up really well, so we'll give it the benefit of the doubt for now. Over to Bitcoin. So let's get into that. So Bitcoin had the big move over the weekend, obviously. Still not above, still never closed above this weekly inside bar. So technically, until you close the week above that, this is still inside of that move. So we'll be watching that by the end of the week, and by the end of the month, this monthly bar as well. So the high is 21,484.60. That's going to be the monthly close, which is coming up in 2 weeks exactly. So we'll watch for that. But yeah, Bitcoin, nice move off the lows. And again, we saw kind of a lot of squeezing in names like Carvana, Bed Bath & Beyond, even obviously Tesla today. So it could be kind of maybe the January effect is starting to play out in some of these names. Obviously, some other ones have had a much more, pretty much as soon as the year started, we had some names get nice bounces, PayPal, Zoom, Roku. But in any case, Bitcoin getting a nice bid, Ether here above the 200 moving average as well. That's having a nice move. I wouldn't do anything with them at the moment. I just think that this is just a short squeeze. So just take that for what it's worth. Anyways, not going to forget it today, European markets. So let's get over to the Euro 50 first. This had a nice move. So again, a failed bear pattern here. Again, we were looking for that test around 36.80. And obviously we got a failed bear pattern, so that did not happen. And we moved up to that 4,200 area. This is into a lot of resistance though. Just be aware of that. On the DAX, I think this is, if you want to short this, I don't have a problem with it up here. We got up to 15.2 today. That's your breakdown area. It's pretty lofty. So very long in the tooth. On the weekly there as well, you can see it right there. Even on the UK, the FTSE, I think about 7,900 is about the high on this thing. And we got up to 78, 74 today. So maybe it can get a little bit higher here. You haven't had a major pullback here. It does look like it's trying to flag. But I think 7,900 or so is max move on these names. So just be aware of that. These are getting very, very top heavy up at these levels. So that is essentially what I've got worked out for them. Anyways, back over to the spiders. Markets close in about 20 minutes here. Again, we're hanging in there sideways. Nothing really, terrible going on in another direction. Semis holding up. Russell holding up. Tesla, Apple leading today. Nvidia leading. I don't see any major problems with this market currently, but just know that we are on borrowed time with this rally. Anyways, guys, going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. Talk to you guys all tomorrow.